The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here on the program as we take a look at what is happening big picture in the market trade, Chad Hart, Iowa State University, is with us here on the show once again. Chad, it's always great to talk to you, my friend. How are you?
Oh, I'm doing well, Jesse. How are you?
I'm doing fantastic. Thanks for joining us here today. As I know you and I were talking a little bit off air, it's been an exciting couple of weeks in this market trade between a WASDE report, and you throw in there the acreage numbers and USDA having to make all those changes. It's been an exciting week, hasn't it, Chad?
It definitely has been. I mean, I think every time we turn around, USDA throws out a number and it surprises us. And so we have to adjust. And then, you look at, just the pattern this week, and it's been, we've went strongly negative, followed by strongly positive. I mean, the idea is that no matter which way you wanted this market to move, you could find some information to support that.
Yeah, and that's the thing, is that you could find some information to support whatever way you want this market to move, and just plenty of surprises. I think one that stands out to me, there were a few, but USDA making a yield adjustment to corn in July. I don't think that's ever happened before since they started some of their new methodology. Has it, Chad?
Well, it's something that they rarely do. So if you look back over the long history of USDA, yeah, they've made a few July adjustments, but it's not something they like to do often. And I think in this case, as you mentioned, USDA has some new procedures that they're bringing in. They definitely look at, satellite information more than ever before. They're looking at, some of the private information that's being gathered and sent into them as well. And so I think we might see them do this more often as we're going forward here. But at the same time, too, I think they're still going to use that, let's call it, cautious approach in adjusting now, because they recognize that, hey, there's a lot of the yield information that, if you will, is genetically set here in July. And so they don't want to get the cart before the horse and be adjusting too much before we really get to the meaningful time for crop development.
Well, and the thing is, even with a yield reduction from USDA, the higher acreage all adds to it. And we got, hang on a second, I'll have to edit that out. Tinley. Sorry.
Just didn't agree with the market,
Yeah, she didn't agree with the market. Beauty of recording.
Yep.
All right, I'll take that again. Well, and Chad, I know as well, you think about it, July with that yield reduction on corn, but you throw in the bigger acreage number, we're still looking at a record corn crop. So, USDA took away a little bit, but we're still looking at just a big crop overall, Chad.
Oh, yeah. I mean, I think that was a fascinating part about what we saw when you combine the June acreage report with the July WASDE. The acreage added about 350 million bushels to expected production. The yield reduction took away about 295 million of it. So net, when you put the two reports together, we're still up 55 million bushels from where we were at in June, and that was staring at a record crop anyway. And so that's the challenge here I think the markets are dealing with, is that, yeah, we are seeing some weather issues out there, but we still have the potential for the biggest crop we've ever seen.
So in my mind, $5 D's corn, is that something we can hold at here with all of this new data out in this corn market? Do you think we go lower, Chad? I mean, what's your take? What do you feel like the sentiment is in the corn market right now?
Well, my own sense is that the market would like to hold this and maybe run it up a little bit here. They are worried about the drought conditions we're seeing out there. And I think they're also looking for some hopeful signs that, now that we've got prices down here in the high fours, low $5 range, hey, we could maybe spur on some additional sales. And so I think we'll be watching to see how do advanced sales on the export side. How do they build up over the next, especially 2-3 weeks here, because this is that period of time, especially as we get into late July, early August, when we start to see those international buyers start to line up. And the demand sector, when you look at it on the corn side, it's been exports where we've been struggling over the past year. So if we can light a little fire underneath there, it helps hold these prices.
And I know we're going to dive more into demand here overall in a second. I want to talk soybeans though first, because that's going to help us set up this demand discussion even more. You look at the acreage report, big cut in acres there, and then you look at the WASDE for July, much bigger carry out than was expected. However, in the grand scheme of things, we're still pretty tight on the balance sheet when it comes to soybeans, Chad.
We are, and I think that's the deal. You went back to the June acreage report, and yeah, the 4 million acre loss there was a big one. And, unlike corn, we didn't see a yield adjustment here. So, what we ended up having was basically a 200 million bushel drop in expected production. That helped keep things really tight. So even though USDA was adjusting demand side down in 2023, we still have an incredibly tight market to work with here, and that helped boost prices here on the soybean side over the last couple of days.
So thinking demand overall, corn and soybeans, as you alluded to this, that's the bigger story in my opinion here right now, is just how ugly our demand has been. You and I have talked about this. And really, since the last time we talked, it's not getting much better, Chad. And I think that's going to be a big cause for concern here. USDA did cut soybean demand on the July WASDE report. They made a cut to crush as well. I just think overall, we got to start seeing some exports and some better demand in quart of beans here. That's what it's going to take. And I don't know if we can get it with all that world competition that's out there right now.
Well, I think that's the biggest challenge now, especially as you want to tear the parts sort of a crop, crops apart. The idea is corn is now starting to price more favorably into the global market, where soybeans, no, we're not yet. And with the tightness we have, we're going to have a hard time doing that. As you mentioned, the idea is that when we look down in South America, we are seeing more crop coming out of that area. It's priced very competitively right now, and they've been beating us in those international sales for, again, the past 9 to 12 months. And so we're going to have a heck of a time restarting that export engine on the soybean side.
And I think that's something that is just cause for concern. And China especially, I know relations are kind of icy there with the U.S. and China, but there was talk that they had just bought some beans off the PNW here in the recent week or so. But still, I mean, I think China's that 1,000-pound gorilla in the room. They really have to step back into the U.S. market here, Chad.
Well, that'd be the deal. They're the ones that can move the market by themselves. So when we're looking here, it's not like they completely shut us off. It's the idea they've just pulled back significantly. They're still our number one buyer when it comes to soybeans, but they're not buying at nearly the levels they've especially bought over the past 2-3 years.
So that's the quart of bean side. How about wheat? I know you look at the wheat numbers that we got here just recently. I mean, U.S. Slow hard red winter wheat harvest going on. Soft red, the Chicago looking good. Some spring wheat issues. We got a lot of world issues, though, when it comes to wheat. What's your overall take on this wheat market?
Well, that's the deal. Again, just like with the corn and bean market, depending on where I look, I can find some positive factors. I can find some negative factors. In fact, when we look at, say, for example, harvest progress, roughly half the states are ahead of schedule, the other half are behind. I mean, just depends on where you're looking as to how the wheat crop looks. But I'll fall back again on the demand side and say, I think that's the big issue here. When I'm looking at wheat, the idea is that, food demand is very stable for us. It's the export market that tends to swing. And we've seen, just like we were talking about with soybeans, a lot more global competition in the wheat market that has hampered our ability to move any excess wheat through the international market.
Well, and obviously, wheat is such a global commodity. And I think about just the competitiveness of U.S. wheat. The dollar's been dropping here recently. That could help a little bit, but still, U.S. wheat is a much higher price compared to some of our world competitors. And one of those, especially Russia, considering just how much wheat they have dumped onto the world market, Chad.
Well, that's the deal. When you're looking at Russia, it's been wheat that's helping fund them and keep them afloat when it comes financially, because the sanctions have truly bitten on Russia. Wheat is the one thing they know they can move relatively quickly, that can, if you will, move around the sanctions that are out there and still find a marketplace here. And when I'm thinking about those export markets, you brought up the idea of the value of the dollar, and I've been getting a lot of questions from farmers on that over the past couple of months. And you're right, the dollar has been weakening. Normally, that should help us reinvigorate those export sales, but our problem's not been a dollar problem. It's been a pricing problem, as you mentioned. The idea is just our internal price is so high that it really hasn't mattered what the dollar's done. We were already sort of on the high end of pricing to reach our international customers.
A bit of a decoupling of the dollar from the grain markets in a way. You think maybe part of that is due to just the inflation and recessionary concerns in the broader economy, Chad?
I think it's a little bit of that. I mean, I think in this case, you can think of it as not only, the inflation and recessionary concerns here in the U.S., but just think that's happening worldwide. And so, especially with our higher prices because of the drought issues we've had over the past 2-3 years here, that has pushed our crop prices up relative to the rest of the world. You throw inflation on top of that, and it's sort of a double whammy in terms of our export sales.
We are having a conversation here today with Chad Hart from Iowa State University. Chad, let's talk a little bit on the livestock side too. I want to make sure we have time to discuss things there. This cattle market's continued to just remain at high levels. Cash has been king in the cattle market, to be quite honest. Feeders have been screaming higher. We got some updated beef production numbers from the WASDE, and we've kind of got past the peak summer grilling season demand. What's your thoughts of this cattle market right now?
Well, I think this cattle market will remain high. And one of the things that, the WASDE brought out is that as we look forward into 2024, we see the beef market continuing to tighten up dramatically because of the drought forcing us to consolidate the cattle herd over the past couple of years, meaning that we're looking at much smaller beef production next year, which is going to help support pricing for at least the next 18 months. I think the issue on the cattle market will be, I think domestic demand has been holding pretty strong. Just like we were talking about the crop side, where we're struggling is export demand. We have seen a good sized drop in beef exports because, just like on the crop side, U.S. beef's high priced relative to the rest of the world right now.
Oh, and to your point there, I know this past week's weekly export sales was pretty rough on the beef side. What was it? Down some 42% from the week prior. So, I mean, just case in point right there, struggling export demand on that beef market. And, you look at China there once again, I think it's the same story. China's been a top buyer, and when they're not a top buyer, it doesn't help out that beef market either, does it, Chad?
It doesn't, but I'm going to put it, it's not just China when I look at beef. You got to think of, the big two for us would be South Korea and Japan. And so when I look at all three of those markets, they're all down double digits in terms of percentage sales. So we're seeing a broad-based pullback right now when I'm looking at beef demand worldwide. And that goes back to that inflationary discussion we had just a little bit ago. The idea is that as consumers deal with higher prices across the board, they tend to pull back on consumption, and things like beef tend to feel that pull fairly quickly.
Recent pullback in corn prices. Should ranchers, if they haven't locked in those feed needs, is that something they need to think about here with just the dynamics and the relationship between cattle and corn right now?
Well, it's something that definitely, as we've seen, like say corn fall back in this $5 range, it does represent let's call it a feed target that we haven't seen in a while. That if you can lock that in along with your feeders and maintain that margin, now's a good time to do that. There's a lot of uncertainty about where that feed price is going to go, really depending upon again, the drought and the impacts there. So if I can make $5 corn work and play it out, like I say, yeah, be more than willing to lock that in as we go into the winter months.
Chad, lastly, in the hog trade as well, we've seen hogs get back up around $100 in the front months. What's your take on that?
Yeah, well, right now I'd say hogs is the one market that I can look at internationally and go, hey, we're doing better there. We've seen export sales actually jump up this year because the hog market was the first market that really took it on the chin in terms of pricing. And now it's one of the few that I can look at and say we are very competitively priced. We've been making those international sales, and we're starting to see domestic demand work its way through. You mentioned, getting through grilling season. Yeah, that helped us here in the short run.
Mm-hmm.
And as I'm looking at especially supplies to finish out the summer, we're kind of tight right now on pork, and that's helping support especially that nearby July futures.
Chad, great thoughts as always. Before we let you go today, anything else you want to mention, reiterate to folks, anything else on your mind here and across the ag sector right now?
Well, I think the big thing here is we talked about all the markets, whether in crops or livestock. We're seeing a lot of volatility, and I think that's going to continue as we look out through the rest of 2023. There's just a lot of, let's call it, both supply and demand side uncertainty. We usually have that at this time, but I'd say it's amped up because of the large swings we've seen, not only in USDA's numbers, but let's call it our own production and spending patterns that have, if you will, accentuated those swings. And so we're seeing larger price swings in the market because of it, which is going to offer up opportunities for folks. At the same time, too, we're going to find some challenges out there. So, yeah, corn prices, they'll swing higher. That'll help the crop guys out, but they'll also swing lower. And that'd be a chance for those feed purchasers to get in there and try to grab something at a reasonable price.
Always volatility somewhere, and something we got to keep our eyes on across the grain, livestock markets, and more. And as always, I appreciate a few minutes of your time. Chad Hart, Economist, Iowa State University. Thanks for joining us here today, and we'll talk to you again soon, my friend.
All right. Thank you, Jesse.
And that's going to do it for Market Talk here today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.